Picture this. September 19th, 1949. The British Chancellor of the Exchequer walks into Parliament to make an announcement. One that won't teach a sting, but will scar history forever. The pound sterling, the currency that fueled global trade for over a century. The money that built an empire stretching across a quarter of the world's surface is being slashed in value by 30% overnight. This wasn't a bold policy move. It wasn't a clever economic strategy. It was a surrender. The mighty British Empire, the same empire that crushed Napoleon, that ruled India, that survived not one, but 2 world wars, was broke. Completely, utterly, irreversibly broke. But here's the twist most people never see. Britain didn't lose its empire because of enemy armies. It didn't collapse because rebels demanded independence. It didn't even fall because of politics. It collapsed because of one invisible weapon, debt. And here's the terrifying part. The United States, the superpower of today, is marching down the exact same road. Different century, different currency, but the same dangerous pattern. Let's rewind to the early 20th century. Britain stood as the undisputed superpower of the world. The pound sterling wasn't just money, it was the global reserve currency, giving Britain what economists call exorbitant privilege. And what did that privilege mean in practice? Britain could borrow in its own currency, print money the world was forced to accept, and finance wars in an empire by making other nations hold its debt. Sound familiar? That's not ancient history. That's exactly what America does today with the dollar. At the dawn of the 1900s, Britain looked untouchable. It controlled nearly a quarter of the planet's land and people. London wasn't just a city, it was the financial heart of the world. Its national debt sat at a modest 30% of GDP. Thanks to a century of discipline after the Napoleonic Wars, everything screamed stability, permanence, too big to fail. But that's the illusion every empire tells itself. Britain's strength wasn't permanent. The cracks were already forming. And when the bill came due, the empire discovered it wasn't invincible, it was vulnerable. Then came World War I, and everything changed. The numbers weren't just big, they were catastrophic. Britain had borrowed massively from America during the war, but that lifeline came at a price, a dependency that would haunt the empire for decades. The war drained Britain's gold reserves, shattered its export markets, and forced the government into printing money and debasing its currency just to survive. In that moment, economists agree, wasn't just a financial crisis. It was the beginning of the end of British hegemony. After the war, Britain desperately tried to cling to its old status. It went back to the gold standard in 1925 at the pre-war exchange rate, a move Winston Churchill later called the biggest mistake of his life. Why? Because it was a bluff. The currency was overvalued, British exports became too expensive, and unemployment soared. Britain was pretending to be rich while its economy was hollowed out. It was a classic case of imperial overstretch, but on a financial battlefield. The world could see the emperor had no clothes. This time, there was no bouncing back. The US emerged as the new global creditor, the new economic powerhouse. With its factories intact and holding most of the world's gold, the Lend-Lease program, which had supplied Britain during the war, wasn't a gift. It was a loan that had to be repaid, and the terms were brutal. The US demanded an end to Britain's imperial preference system, effectively dismantling the economic foundation of its empire. The 1949 devaluation wasn't the start of the collapse. It was the public admission of it. The pound was no longer mighty. The empire was no longer sustainable. India gained independence in 1947, followed by a rapid wave of decolonization. Britain simply couldn't afford to maintain its global military presence. The police officer of the world had gone bankrupt. So what does this history lesson have to do with today? Everything. Look at the parallels. The US, like Britain before it, enjoys the exorbitant privilege of the world's reserve currency. We can run massive deficits, print dollars, and export our inflation to the rest of the world because everyone needs dollars to trade. But for how long? US national debt is currently over $34 trillion, exceeding 120% of GDP, and it's projected to climb relentlessly. Just like Britain financed 2 world wars with debt, the US has financed decades of foreign interventions, social programs, and tax cuts by borrowing from the future. We are no longer the world's largest creditor, as we were after World War II. We are now the world's largest debtor, by a huge margin. China, Japan, and other nations hold trillions of dollars of our debt. Sound familiar? The British Empire didn't fall to a military invasion. It crumbled under the weight of its own balance sheet. Its global influence vanished, not when its armies were defeated, but when its currency failed. History shows that military power is temporary if it's not backed by economic power. When the world loses faith in your money, they lose faith in your leadership. The warning from 1949 is crystal clear. No nation is too big to fail. No empire is eternal. And the most dangerous threat isn't always from an external enemy, but from the silent, creeping rot of debt. The question isn't whether this pattern can repeat itself. The question is, are we watching it happen right now? How does an empire die? not with a bang, but with an invoice. For centuries, the British Empire was the master of the world, built on trade, conquest, and the unshakable power of the pound sterling. But in the 20th century, it all came crashing down. This isn't a story of glorious battles or heroic last stands. This is a story of how the world's greatest empire went bankrupt. And it all starts with a debt that Britain thought it had already paid in blood. Through the 1920s and into the early 1930s, Britain was haunted by its war debt from World War I. By 1934, it still owed the United States a staggering $4.4 billion. The British felt they had already paid, not in dollars, but in the lives of their soldiers. Morally, they believed the sacrifice of their young men had settled the account. Economically, they saw this endless chain of war debts not as repayment, but as a noose, strangling their recovery from the Great Depression. So in 1934, Britain did the unthinkable. It defaulted on its World War I debt to the United States. Chancellor Neville Chamberlain tried to downplay it. If World War I wounded Britain's finances, World War II finished the job. By 1945, Britain's debt wasn't just high, it was catastrophic, soaring past 200% of its GDP. Imagine that. The total debt was double the value of the entire national economy. 4 years. 55% of the country's output had been poured into the military. Exports had collapsed to almost nothing. Britain was no longer living on trade, but on American aid and future promises. But here's the twist that truly broke the empire's back. It wasn't just the debt to America. It was something far heavier, far less forgiving. Sterling balances. These were essentially IOUs owed to its own allies and colonies, who had supplied goods and services throughout the war. By the end, Britain owed over £3 billion. That's $1.25 billion to India alone, and another $450 million to Egypt. And here lies the cruelest irony. The very colonies Britain had drained for centuries were now its creditors. Unlike America, these countries couldn't afford to be generous. They couldn't just cancel the debt. They needed repayment. He tried to persuade India and other nations to accept a partial cancellation, warning that if they didn't, Britain would have no choice but to pull out of its military outposts in the Middle East, Asia, and the Mediterranean. He was right. The empire wasn't defeated in battle. It was bankrupted by the very people it once ruled. Then came the final blow. In September 1945, just weeks after Japan surrendered, President Truman pulled the plug on Lend-Lease overnight. The program that had kept Britain alive during the war was gone. No Lend-Lease meant no more American supplies, but it also meant Britain had no exports, no dollars, no way to even feed its own population. The empire that once ruled the seas was suddenly forced to beg. In 1946, London struck a desperate deal. The Anglo-American loan, $3.75 billion from the United States, over $60 billion in today's money, plus another $1.9 billion from Canada. On the surface, it looked like salvation, but salvation came with a trap. The Americans attached a devastating condition. Sterling had to be made freely convertible into dollars. In other words, anyone holding British pounds could exchange them for US dollars on demand. And here's the part no one was supposed to know. Much of that loan was secretly earmarked, not for rebuilding the economy, but for financing foreign military outposts to keep the empire afloat. The loan was meant to last for years. It was gone by 1947. What happened? Convertibility was a disaster. The moment sterling could be exchanged for dollars, countries holding those massive sterling balances, India, Egypt, and others, stampeded to cash out. Britain's dollar reserves didn't just shrink. They evaporated almost overnight. The British government had no choice but to suspend convertibility/domestic spending and gut its overseas commitments. The empire wasn't toppled by armies, but by a few clauses buried in a loan agreement. The humiliation was complete. Which brings us to September 19, 1949, the day of Britain's surrender without a war. Chancellor Stafford Cripps stood before Parliament and announced what no empire ever wants to confess. The pound would be devalued by 30% overnight. With one stroke, the currency that once ruled the world didn't just fall in value, it fell in status. The pound was no longer the world's reserve currency. The empire was no longer the world's banker. Britain was no longer a superpower. The bankruptcy of the British Empire was no longer a whispered secret. It was undeniable, public, and utterly humiliating. And this is the brutal law of debt. You can borrow, but you can't outrun interest. You can print money, but you can't print trust. You can fight the markets, but you can't win forever. Eventually, you can't defend your currency. Eventually, you can't hide the weakness. Eventually, you're forced to admit defeat. This debt crisis didn't just crush Britain's currency, it dismantled Britain's empire piece by piece. In 1947, India declared independence. Not because Britain suddenly embraced the ideals of freedom for its colonies, but because it could no longer afford the cost of ruling it. The price of administering, policing, and defending the jewel of the empire was simply too high for a bankrupt nation. In 1948, Britain pulled out of Palestine. not because it wanted to leave, but because it had no money left to stay. Soon after, Britain abandoned its commitments in Greece and Turkey, not as a choice, but as a surrender, and begged the United States to take its place. That desperate plea birthed the Truman Doctrine, the very moment America officially stepped into Britain's shoes as the new guarantor of global security. The pattern is undeniable. Britain didn't choose to end its empire. It didn't hand over power with grace and dignity. It was forced out by bankruptcy, by exhaustion, by a complete financial collapse. But the most humiliating moment, the final nail in the coffin, came in 1956. The Suez Crisis? This was the moment the illusion of British power shattered for good. Here's what happened. Egypt's President Nasser nationalized the Suez Canal, a vital artery for British trade. Enraged, Britain, France, and Israel launched a military operation to seize it back. Militarily, the invasion was a success. But wars aren't just decided on battlefields anymore, they're decided in banks. As the fighting began, the Bank of England started hemorrhaging its reserves, losing $45 million in just 3 days. US President Eisenhower didn't send troops. He sent a threat far deadlier. He announced that America would start dumping its massive holdings of pound sterling on the open market, an act that would have crippled Britain's financial system entirely. At the same time, Washington blocked Britain from getting emergency assistance from the IMF until it backed down. British Prime Minister Anthony Eden had no choice. Britain had won the military fight, but it couldn't win against American money. Within days, Eden accepted a UN ceasefire. The message was brutal and clear. Britain could still fire its guns, but it couldn't fund its wars. It could still project power, but only with America's permission. The 1956 Suez Crisis wasn't just a political setback, it was the empire's obituary. It was the moment Britain slipped, officially and irreversibly, into the ranks of second-tier powers. The empire that had once ruled a quarter of the world's population had died, not on a battlefield, but on a balance sheet. The story doesn't even end there. In 1976, 20 years after the Suez Crisis, Britain faced another devastating sterling crisis. The pound was plummeting, the government couldn't raise enough funds, and the last remnants of imperial pride were on the line. Prime Minister James Callaghan had no choice. He was forced to go to the International Monetary Fund, the IMF, for a £2.3 billion rescue package. At the time, it was the largest call on IMF resources in history. But this money came with strings attached. The IMF didn't just hand over a blank check, it dictated terms. And these weren't small adjustments. There were conditions that demanded deep cuts in public spending. Conditions that effectively put the UK's domestic policy under foreign control. The Chancellor, Denis Healey, had to go, cap in hand, to the IMF, essentially begging for help to manage Britain's own economy. This wasn't just about money or policy. It was about power war, more accurately, the shocking lack of it. And that is the final, brutal lesson of empire. The end of Britain's global dominance wasn't marked by glorious last stands or spectacular battles. It wasn't the roar of cannon fire or the sight of invading armies. It was the slow, grinding, humiliating truth of financial dependence. When you lose the money, you lose the power. And by 1976, Britain had lost both. And here's the final insult to that legacy. Britain did UNT finish paying its World War II debt in 1945? It did UNT finish in 1960? It did UNT finish in 2000? The very last payment came on December 29, 2006. 61 years after the guns fell silent, Britain sent a final $83 million to the United States and another $23.6 million to Canada. Over the decades, the government had been forced to suspend payments multiple times whenever exchange rates made repayment impossible. But even with those pauses, the total amount paid back with interest amounted to nearly twice what was originally borrowed in the 1940s. Think about that for a second. Britain, a supposed victor of the war, spent over 6 decades paying off the cost of that victory. But what kind of victory is that? It wasn't glory. It was debt, dependence, and a hollow triumph. The immediate cost of the war was catastrophic, but the consequences didn't just fade away. They lingered for generations. And that, in the end, is the true measure of an empire lost. Now let's talk about America B, because the parallels are absolutely terrifying. By 1945, Britain's national debt had exploded to over 200% of its GDP. Interest payments alone were devouring more than half of the entire national budget, while its foreign obligations had become an invisible noose tightening around its neck. But the worst part? The empire, in its hubris, still thought it could survive. Fast forward to today. America's federal debt is now over $33 trillion, already approaching 130% of its GDP. In fiscal year 2024, the United States spent a staggering $882 billion just on interest payments. To put that in perspective, that's more than the $874 billion spent on the entire military. And this is just the beginning. The national debt is projected to surpass $52 trillion by 2035, and interest costs alone are forecasted to hit $8 trillion between 2023 and 2032. But here's the truly frightening part. America is not just borrowing for growth or investment. America is borrowing to pay the interest on its existing debt. We are borrowing just to stay afloat. With every passing year, the margin for error is shrinking. The clock is ticking, and history has a chilling way of repeating itself when its warnings go unheeded. Next, let's examine military oversight. Britain once maintained a global empire stretching from India to Egypt to Malaysia, but 2 world wars drained its resources beyond any hope of recovery. Today, America operates 865 foreign military bases across the globe in the Middle East, Asia, and Europe, and spends more on its military than the next 9 countries combined. An incredible $997 billion in 2024. But even with all this power, the wars in Iraq and Afghanistan alone cost nearly $8 trillion, leaving the countries stretched perilously thin. Then there's the vulnerability of the reserve currency. Britain lost its reserve currency status between 1944 and 1949. This was not just a blow to its prestige. Devaluation was forced upon it by an inability to defend the pound. The convertibility crisis of 1947 showed the world what happens when your creditors come calling, and you couldn't pay up. Today, the US dollar's dominance is slipping. Its share of global reserves has fallen from 72% down to 59%. And this isn't just a passive decline. Nations like the BRICS countries are actively building alternative financial systems. And the weaponization of sanctions is only accelerating their efforts to dollarize. Finally, there's creditor dependence. Britain survived World War II only because of massive loans from the United States. But those loans gave America the power to dictate British policy, as we saw during the Suez Crisis. The sterling balances held by former colonies became a millstone around Britain's neck. Today, China holds over $1 trillion in U.S. treasuries, and total foreign holdings of U.S. debt exceed $7.7 trillion. This isn't a theoretical risk. Coordinated selling pressure from these creditors could force America into the same helpless position Britain faced decades ago. And here's a rule you simply cannot ignore. Ferguson's Law, named after the historian Niall Ferguson. It states that any great power spending more on servicing its debt than on its own defense is at risk of ceasing to be a great power. America crossed that threshold in 2024. The warning signs couldn't be clearer. First, debt payments overtake defense spending. Then, you can no longer afford to maintain your global military commitments. Then, you are forced to withdraw from strategic positions around the world. And finally, you lose your influence, your independence, and your ability to shape global events. Does that sound familiar? It's the exact pattern Britain followed. The parallels are not just interesting, they are terrifying. History doesn't repeat itself, but it often rhymes. Britain's fall wasn't about a single lost battle. It was a slow, agonizing drain of its financial strength. And when you look closely, the parallels to America's situation today are hard to ignore. Let's be clear, there are some big differences. The US economy is a giant on the world stage, far bigger than Britain ever was relative to global GDP. America also controls the world's reserve currency, the dollar. This means we can, in theory, just print more money to pay our debts. And unlike Britain, which faced the constant, existential threat of a rising Germany, America is protected by 2 vast oceans. We also have a technological edge that's undeniable. From military hardware to the swift financial system, these advantages are real. But here's the uncomfortable truth. They don't change the fundamental laws of economics. They are shock absorbers, not a magical shield. A bigger economy just means the numbers are larger when the debt comes due. Printing money isn't a ghetto tough jail free card. It's like kicking the can down the road, all while inflation eats away at everyone's savings. Geographic isolation and tech superiority buy you time, but they don't make a mountain of debt disappear. They postpone the day of reckoning. They don't prevent it. So, how do we know if we're on the same path? What are the warning signs? The flashing red lights on the dashboard? Well, some are already here. First, look at our national budget. Right now, the interest we pay on our national debt is projected to exceed our entire defense budget. Let that sink in. We will soon be spending more money just to service our past borrowing than we do to protect the country. This isn't a future problem. It's a present-day crisis. A massive red flag that fiscal reality is catching up to us. Britain faced a similar moment where the cost of its empire's debt became too heavy to bear. Second, watch the dollar. For decades, the US dollar has been the world's go-to currency. But that dominance is slowly, quietly eroding. We're seeing a steady decline in the dollar's share of global reserves held by other countries. Nations are actively looking for alternatives. The rise of new payment systems, like the one being developed by the BRICS nations, is a direct challenge to dollar supremacy. And more major commodity trades, especially in oil, are being settled in other currencies. The day the world no longer needs dollars as much as it used to will be the day America's ability to borrow cheaply ends. Third, pay attention to our global posture. An empire's power is projected through its military and diplomatic presence. Britain's decline was marked by a forced retreat, pulling back from bases and commitments it could no longer afford. If we see America unable to maintain its forward bases, if we start withdrawing from long-standing alliances not by choice but by necessity, that's a critical sign. An even bigger warning is if our fiscal policy starts being dictated not by our own leaders, but by the nations and institutions that lend us money. When your creditors call the shots, you are no longer in control. Finally, there's the political chaos at home. The constant partisan gridlock and the focus on short-term political wins over long-term stability are like pouring gasoline on a financial fire. When a country can't come together to solve its biggest problems, it accelerates its own decline. Britain's political class was also paralyzed at key moments, unable to make the hard choices needed to right the ship. This dysfunction isn't fatal on its own, but when combined with severe economic vulnerability, it creates a perfect storm. The story of the British Empire teaches us a chilling lesson. Great powers rarely die on the battlefield. They die in the treasurer's office. They crumble under the weight of their own financial obligations. The pattern is tragically consistent. It starts with military overstretch, making commitments around the globe that are incredibly expensive. To pay for it all, you borrow, and you keep borrowing, financing a lifestyle you can no longer afford. The debt piles up, year after year, decade after decade, until it quietly exceeds your economy's ability to support it. The crisis, when it comes, feels sudden, but the rot has been spreading for years. Britain, in 1938, on the eve of World War II, still looked like a mighty, stable empire to the outside world. But the underlying weakness was there. The war didn't cause the collapse. It was simply the final, knockout blow to an already exhausted fighter. Now consider America. We have been running massive structural deficits for over 2 decades. Since 2001. 20 years of spending far more than we take in. We may be much further down this path than most of us are willing to admit. The ultimate lesson from history is brutally simple. When a great power's debts and global commitments outstrip its capacity to pay for them, it faces a binary choice: radical reform or eventual collapse. Britain couldn't choose. It tried to have it all, desperately clinging to the trappings of empire while hoping the debt problem would magically solve itself. They devalued their currency, defaulted on some debts, and took on others. The result wasn't a clean break, but a long, humiliating decline, punctuated by crises like the Suez Canal incident, ultimately leading to dependence on its former colonies. Today, America stands at that very same crossroads. We have a choice. We can face reality. We can reform our fiscal policy, get our spending under control, and realign our military commitments with what we can actually afford. We can manage a graceful transition from the sole global hegemon to a leader among equals. Or, we can do what Britain did. We can continue down the current path, borrowing and spending, hoping that this time is different. We can cling to the idea of American believing that we are somehow immune to the economic laws that have brought down every great power before us. But history is patient, and debt is unforgiving. If we choose inaction, there will eventually be a moment, our own 1949, when Britain was forced to devalue its currency, or our own Suez crisis, a moment of profound national humiliation. And when that moment arrives, it won't be a slow-motion decline anymore. It'll be sudden, brutal, and undeniable. The fall of the British Empire is one of the most misunderstood stories in modern history. Most people think it was about losing colonies or military defeats. But the real story? It's a financial thriller. Britain didn't lose its empire on the battlefield. It lost it on the balance sheet. The empire that ruled a quarter of the globe couldn't manage its own finances. The pound sterling, the currency that dominated world trade for over a century, collapsed because Britain simply borrowed more than it could ever hope to repay. The same nation that stood against Napoleon, Kaiser Wilhelm, and Hitler was ultimately brought to its knees by something far more relentless: compound interest. Now, take a good look around. The parallels with the United States today are chilling. The staggering debt levels, the global military presence stretching resources thin, the dollar slowly eroding status as the world's reserve currency, and our growing reliance on foreign creditors. It's like watching a historical replay in high definition. The script is almost identical. The question isn't if we're on a similar path, but whether we'll steer away from the cliff's edge. You might be thinking, okay, interesting history lesson, but what does this have to do with me? This isn't just about geopolitics or abstract economics. This is about your life, your savings, your future. If America continues down Britain's path, the consequences will hit home hard. Let's get specific. First, your savings could be decimated. When Britain was forced to devalue the pound in 1949, anyone holding that currency lost 30% of their purchasing power. Overnight, Gone. Imagine waking up tomorrow and finding that every dollar you have is suddenly worth 30% less. If the dollar were to lose its reserve status, the fallout could be even more catastrophic. The nest egg you've worked so hard to build could shrink dramatically, without you spending a dime. Second, your investments would be in turmoil. After the pound collapsed, assets priced in sterling became toxic. Investors fled, and values plummeted. A similar crisis of confidence in the dollar could trigger massive selling pressure on U.S. assets, stocks, bonds, real estate. The markets we rely on for our retirement and financial security could face unprecedented strain. It's not about a market correction, it's about a fundamental reevaluation of the entire system. Third, your standard of living would almost certainly decline. It's hard for us to imagine, but in just 30 years, Britain went from a global superpower to a nation facing rolling blackouts, rampant inflation, and austerity measures imposed by the International Monetary Fund. Think about that. The IMF telling Britain how to run its economy. A similar fiscal crisis in the US could lead to higher taxes, reduced public services, and a painful squeeze on household budgets. The American dream would feel a lot further away. And fourth, America's independence on the world stage would be compromised. As Britain's economic power waned, it became increasingly dependent on American approval for its foreign policy decisions. It had to ask for permission. If the US becomes a debtor nation, beholden to its creditors, like China, our ability to act in our own best interests will be severely limited. Our foreign policy could be dictated not from Washington, but from Beijing or other financial capitals. It's a bleak picture, I know, but burying our heads in the sand is the worst thing we can do. The British elite believed their empire was permanent, their currency invincible, and that this time was different. They were tragically wrong. The fundamental laws of economics that brought down empires from Rome to Spain to Britain have been repealed. They apply to everyone. So, the critical question is, what can you do? How do you protect yourself and your family from a potential dollar decline and an American fiscal crisis? Waiting for the storm to hit is not a strategy. The time to act is now, while you still can. Here are 4 practical steps you can start thinking about today. First, diversify your assets. This is the most fundamental rule of risk management. Don't keep all your financial eggs in one basket, especially if that basket is the US dollar. Think about allocating a portion of your wealth to other strong currencies. Consider tangible real assets that have historically held their value through turmoil, like precious metals, gold and silver. Real estate, especially income-generating property, can also be a hedge. The goal is to build a portfolio that is entirely dependent on the fate of a single currency. Second, and this is crucial, invest in yourself. Your human capital, your skills, your knowledge. Your expertise is an asset that can't be devalued by any government or central bank. In a shifting economic landscape, professional skills, specialized knowledge, and practical abilities become even more valuable. Whether it's a trade, a tech skill, or the ability to start a business, your capacity to create value will be your ultimate safety net, no matter what happens to the dollar. Third, build resilience and redundancy into your life. Don't be entirely dependent on a single system for your well-being. This means having more than one stream of income. The gig economy, a side business, or freelance work can provide a crucial buffer if your primary job is at risk. It also means having backup plans. This could be as simple as having an emergency fund, or as complex as having options for where you could live. The key is to create options and avoid single points of failure. And fourth, watch for the red flags. Don't wait for the crisis to be front-page news. By the time it's obvious to everyone, the exits will be crowded, and it will be too late to protect yourself effectively. Pay attention to the national debt, inflation rates, and the dollar's status in global trade. Educate yourself. By staying informed and recognizing the warning signs, you can act while there's still time.